interest expenses. Today we will discuss about other matters. Trading stock. The deduction for allowance for trading stock. What do you mean? What do you mean by trading stocks? Trading stocks mean inventory, right? Trading stock mean inventory. Opening stock, closing stock, that sort of things. So the deduction for allowance for trading stock is allowed, and for determining the allowance for trading stock, it needs to follow the generally accepted accounting principles. It's mean generally accepted accounting practice in Sri Lanka is LKS, Lanka Accounting Standard, and SLF or Sri Lanka Financial Reporting Framework. A formula has been given in section 13 of the Act. The determination of the cost is explained in this section 42. Right? Simply, trading stocks mean, so we calculate cost of sales, no, in the income statement, cost of sales, statement of financial position. You can find there. That's a room called to calculate gross profit. We do normally opening stock plus purchase minus closing stock equals cost of sales, right? Then sales minus cost of sales equal gross profit, right? For that calculation, this trading stock deals, especially in closing stocks. The opening value of trading stocks of the business for the year, right? For this figure, plus expense incurred during the year, and that are included in the cost of trading of this, right? So purchase, normally it's called what? Purchase, and closing value of trading stock for the year. So closing stock equal what? Cost of sales. In accounting, we says cost of sales, right? But in tax purpose, we use the term allowance for trading stock. Right. Now let's move to research and development expenses and agricultural expenses. Research and development expenses and agricultural startup expenses. So here we know the term research and development. Research and development means, right? Research and development means it's an expense incurred in carrying on any scientific, industrial, agricultural, or any other research for upgrading the business through any institution in Sri Lanka, right? So for example, now you are producing facial creams, right? Facial cream. Now you are going to introduce advanced version, right? For example, uh, at present you are producing facial cream, whitening cream. The specialty of whitening cream is once you apply this cream, the face become bright after 2 weeks, right? At present, when you apply the cream, the face become bright after 2 weeks. Now we are going to introduce a new facial cream that if you apply that cream, uh, the face become bright within 24 hours. So that's what you are going to introduce. For that, you are doing some kind of expenditures to introduce or to invent that kind of product. So the amount you have spent to produce the new item is called research and development expenses, research cost, right? Research and development expenses and agricultural startup expense can be deducted irrespective of the fact that they are capital nature or not. Capital nature means, you know, that there are two types of expenditures. One is capital expenditure, another one is revenue expenditure. Capital expenditure, it's right, a big bill, the big uh, billboards, right, and purchase of building, purchase of machineries. These are the capital expenditure. We can use this kind of assets for more than 12 months. Revenue expenditures mean we can, so that cost incurs, the benefit we can utilize for just within 12 months, right? So Research and development cost and agricultural startup cost. Uh, no need to worry about whether this cost is capital nature or in revenue nature. However, if the research expense incurred are included in the cost of assets, then should be allocated, should be excluded, right? We cannot include that cost into the assets. Right. Now we'll discuss about the meaning. First, agricultural startup expenses means expenses in operating, also opening up any land for cultivation, for any animal husbandry, cultivating land with plants, the purchase of livestock or poultry to be reared on land, or maintaining tanks or ponds, or the clearing or preparation of any inland waters for the reasoning of fish and rearing of fish, and the purchase of fish to be react to in such tank or pond or inland water, right? Simply means for the purpose of doing agriculture, you develop a land, right? There's a land with right, undeveloped land. If you find undeveloped land, it never been used for agriculture purpose. Now you take the land and you make some expenses, you make some development, or for the agriculture purpose, or you can get the land, or you can buy livestock, for example, cow, right, goats, or pig, or whatsoever, right, for the purpose of uh, for the purpose of this kind of things, right? So that's called agricultural expenses. Agricultural startup expenditure, not agricultural expenses. So startup expenditures, right? And research and development expense means expenses incurred in carrying on any scientific, industrial, agricultural, or any other research for upgrading the business, right? The important word is upgrading of the business through any institution in Sri Lanka. For any innovation or research relating to high value agricultural products by the person or through any research institution in Sri Lanka, or the process of developing the business and improving business product or process which should be beneficial to Sri Lanka. In simple, research and development expenses mean the amount of expenditure you have spent to introduce a new product, or to develop a new product, or to improve existing process, right? The amount of expenditure to introduce next version of the product or process. As per the sixth schedule, a person is entitled to an additional deduction equal to 100% of total amount of research and development expenses deducted for the year under the section 15 explained above. 3 years of assessment after the commencement of the Act number 24 of 2017. New expenses incurred on or after 1st of April 2018. Right. Capital allowances and balancing allowances. Capital allowance mean, do you know what is a depreciation? Depreciation for assets, do you know that? Right? Do you know what about depreciation of assets? Depreciation, normally we make provisions for the capital assets. Capital asset includes property, plant, equipment, right, and machineries, and furnitures, motor vehicles. For that sort of things, we calculate depreciation. The depreciation is not deductible expenses under the provision of Inland Revenue Act. Rather, uh, in tax accounting, capital allowance is allowed. So normally, for depreciation rate is decided by whom? Say for example, you have a machine, right? The number of lifetime, right? Number of useful years is determined by whom? Is determined by whom? Please respond in chat box, or you can unmute your mic and you can tell. For a company, if they are an asset, say machine, the lifetime of the machine is determined by whom? Who is determining the depreciation? Who is determines? Who determines? Please respond your answer. The percentage of depreciation decided by whom? No one answer. Accountant. Then other answers, any other answers? MS12 replied organization. Yes. Any other answers? Any other answers? Right, owner of the assets. No, normally it is decided by uh, management, right? It may be accountant, organization, owner of the assets. Okay, right? Simply we can say the rate of depreciation and number of useful life of in years are decided by management, right? Management. So say, right, there are two companies, company A and company B. Both companies having same assets, same class of assets. Machine A and machine X and I will do in Excel sheet, right? Can you hear now? Can you hear? Okay. Right. I will explain you again. There are two companies, company A and company B. Both are having same machine, right? The machine value is 1 million. Value of the machine is 1 million. Company A decides its number of useful years as 3. Company B decides number of useful life is 8 years. Now, what's the depreciation? Depreciation value how much? For a company, 1 million divided by 3 years, therefore 300,000 or so, right? Uh, and B company, 1 million divided by 80 years, therefore depreciation is 125,000. For A company, depreciation 333,000, and for B company 125,000. Let's hear profit. Profit before depreciation. Assume that profit before depreciation for both companies are 500,000. Profit before depreciation 500,000 for A company, and for B company is 500,000. Then how much profit after depreciation? How do we get it? Profit after depreciation. So here this is the profit. So this is depreciation, right? This is profit before depreciation. This is depreciation, and we deduct this depreciation from profit before depreciation. We can get this value, profit after tax. For company A, it is 166,666 rupees profit after depreciation. For company B, 375,000. Assume that the corporate tax rate is 35%, right? So 35% tax should be imposed on profit after depreciation. Therefore, 35% of 166,666 rupees is 58,303. For B company, 35% into 375,000 is equal 131,250. So my question is, which company pays more tax in this scenario? Company A or company B? Which company pays more tax? Yes. Company B is paid more tax. Good. So what is the reason for that? What is the reason? Right. What's the reason for this? Right. These differences arise due to changes in number of years of its life. Right. Number of the depreciation. The depreciation has more to company B because less number of less its duration lifetime is less 3 years for the same company. Right. Right. So it is fair or unfair? It is fair or unfair? It is unfair, right? It is unfair. So therefore, to reduce this kind of unfair, the government has introduced a unique rate, right? Say, right? Government government has introduced for this kind of machines 5 years, right? 5 years. Now, how much depreciation can you calculate and tell me? The government has introduced 5 years depreciation. Then how much depreciation for company A and company B? Right, exactly. Right, good. For company A, right? Uh, company A, 1 million divided by 5 years, it's equal to 200,000. And for B company also, right? For B company also, same value. Now it's fair or unfair? It's fair or unfair? Now see tax, profit before tax, profit after depreciation. How much? Profit after depreciation. Say profit before depreciation is 500,000 minus 200,000. How much for this? Both companies' profit are 300,000. Now tax at 35%. Therefore, profit is 300,000 into 0.35%. And how much? 105 in here, 105, right? Isn't it? Now it's fair, right? We have calculated this depreciation, right? We have calculated this depreciation according to the policy of the company, according to the rules of the policy of the company. This is called depreciation, right? Accounting in which a depreciation, right? This rate, this 5 years, this 5 year rate is introduced by whom? The company or the government? Who has set this year? 5 years, who has it? Company or yeah, government, right? If we calculate depreciation based on the rules of the government, right? Here, these values, isn't it? These values we have calculated based on the rules of government regulations. This is called capital allowance, right? We call capital allowance. In summary, calculate, right? If we are follow accounting rules to calculate depreciation, it is called depreciation. If it is calculated based on the provisions of Indian Revenue Act, it is called capital allowance. That's the difference, right? The difference between depreciation and capital allowance. The depreciation is calculated based on LKS, right? Capital allowance is calculated based on Act, based on the Inland Revenue Act. Right? Any questions? Any questions? Right? Okay. Now let's move. அங்க போனா நீங்க பிரான்ச்சுக்கு
செய்ய போறாங்க ரூம் டு பி செய்ய போறாங்க ரூம் டு பி
சரி அதுக்கு போறீங்க இதெல்லாம் நம்ம கிட்ட நம்பர் இல்லையா
பிரசாந்தியக்கா தான் சொல்றேன்
MS 11 ask why it mentioned capital allowance, right? So people are confused of depreciation or other rate, so that's why they put a different name, right? For the calculation of cost of asset, sorry, cost of sale, we use trading allowance now. Here we use trading allowance, trading stock, but in accounting we use cost of sales. Here we use capital allowance and balancing allowance, right? Right. When calculating a person's income from a business for a year of assessment, capital allowance can be deducted under the second, fourth or sixth schedule, and balancing allowance, loss from disposal of depreciable assets, can be deducted. Here I will explain you later what means balancing allowance. Balancing normally in company when doing company accounts for PP, property plant equipment, LKA 16, it's about, right? When any assets are sold, we calculate what? Profit on sale of asset, isn't it? Normally we calculate, when we sell any assets, we calculate profit from sale of asset. For that is for accounting purpose. The same procedure, right? Same procedure. When we calculate sale of profit on sale of asset, we use depreciation, isn't it? We use depreciation. But in tax procedure, when we also have to find out are there any profit or not on sale of assets. That time we use capital allowance, we are not deducting depreciation. We deduct only capital allowance. In that time we use balancing allowance, right? It may confuse you, I will explain, right? Here say a cost of the asset, right? Cost of the asset, how much in this example? 1 million, right? Cost of the asset is 1 million, right? It has been used for 3 years. 3 years. How much accounting depreciation? Accounting depreciation in this, no, yeah, in this example, how much accounting depreciation? No, don't take 3 years, take 2 years, right? 2 years. How much depreciation per year? This value for 2 years. How much? And then how much uh, net assets? No, net assets. What do you call net value? How much minus this value, right? And assume that the sale proceeds, say it has been sold for 400,000, right? It has been sold for 400,000. Cost of the machine is 1 million. The asset was used for 2 years, right? How much profit on sale of machine? How much? Any answers? How much profit on sale of machine? Cost 1 million. When you type the answer, please put on public your answer, not private. Menaka MS11 says, how much answer? Right? How much? Sales proceed minus net value. 66,666. Is it right or not? Right. Right. So we have calculated this value according to the rules of Lanka Accounting Standard, LKAS. Right. So this calculation is okay for preparing income statement, but for the tax purpose, we have to calculate in different method, right? Here the same, sales proceeds is 400,000, cost is 1 million. How much government approved depreciation? Government approved depreciation, how much for this asset? Accounting management approved amount is this. How much government approved allowance for 2 years? Per year 200,000. Therefore, for 2 years it will be 400,000. Now how much? Now how much profit from sale? Profit from sale of assets. Sales proceed 400,000. Depreciate, right? Cost is now net value how much? Yes, sale proceed 400,000. Right? Cost is 1 million. Right? Net value. So capital allowance. Okay, this 400,000 is capital allowance. Capital allowance. And net value is 600,000. 1 million minus 400,000. 600,000. Now, my question is how much profit or loss from sale of the machine? Profit or loss? Profit or loss? Profit, loss, loss. Yeah, the answer is loss. How much loss? Loss how much? How much loss? Yes, yes. How much loss is this value? This loss. This value is called balancing allowance, right? This is called balancing allowance. This is called balancing allowance, right? In accounting, we say profit from sale of machine or loss on sale of machine. when we deduct depreciation. But here we deduct capital allowance, right? We deduct capital allowance, not depreciation. We have deducted capital allowance. Therefore, this answer is what? Balancing allowance. Simply, it's called what? Loss on sale of machine, right? In tax, we have to use balancing allowance. In accounting, we use loss of loss on sale of machine, right? That's a different, right? That's a different. Any questions? Any questions? Right. If it is profit, say it was for same example, it has been used for 4 years. It has been used for 4 years. Then how much now depreciation? How much? It has been used for 4 years now. Earlier it was 2 years. Now it was 4 years. How much depreciation? 800,000. Yeah, good. 800,000. Then how much net value? Net value how much? 200,000. Right? Net value is 200,000. Now how much profit? Profit or loss? Profit is 200,000. Profit 200,000. This profit in accounting we say profit on sale of machine, but in tax we say it's called what? It is called not balancing allowance. Right. It is called assessable charges. Right. In case of profit, it is called as assessable charges. Right. It is called as assessable charges. Assessable charges. Right. In case of loss, we are telling as we call as balancing allowance. In case of loss, we call as assessable charges. Right. written down with you, right? And in the act, it defines what do you mean by depreciable asset. Depreciable assets. It means an asset to an extent to which it is employed in the production of income from a business and which is likely to lose value because of wear and tear, obsolescence, or other passing of time, but exclude goodwills and interest in land, a membership interest in any entity, and taking trading stock. It should be calculated according to the straight line method based on second and fourth schedules. And we have to use only, we have to follow straight line method, no reducing balance or any other method. Capital allowance should be calculated on the depreciation basis, right? Capital allowance should be calculated on the depreciation basis. Now we let us discuss what do you mean by depreciation basis. Right? Depreciation basis is the sum of depreciation basis of asset at the end of the year of assessment and the amounts added to the depreciation basis of the assets during the year of the assessment in respect of additions to the cost of assets. Capital allowance will be granted for the year of acquisition. Capital allowance will be granted for the year of acquisition, right? As the asset is owned and used at the end of the year of assessment, right? In accounting, normally, here, normally in accounting, say an asset purchased on uh, 1st of January, sorry, accounting period start on 1st of January 2020 to 31st December 2020, right? If any asset purchased on asset purchased on say 1st of July 2020, then how many years will we will charge depreciation for the asset? Say the value of the asset is 1 million. Value of the asset is cost. Cost of the asset is 1 million, right? A useful life, useful life, useful life, say 5 years. My question is, for the accounting year 2020, what's the depreciation? How much depreciation in accounting? Yeah, we have to find only 6 months. No, how much? Only 100,000. Only 100,000. Right? It's 100,000. But when we calculate capital allowance, when we calculate capital allowance, we have to, right? We have to take all year, right? Say government also approved for 5 years. Government approved useful life 5 years. Cost is 1 million. How much capital allowance? In this case, we have to find depreciation for the whole year. Then how much? We have to calculate depreciation for whole 12 months, not 6 months. So that's a different, right? It's a different from accounting depreciation and capital allowance. Even though if the asset is purchased and used for only one day in the year, we have to charge all 12 months capital allowance. Right? Any questions you can ask? Right? No matter on which date, no matter how long it has been used in that year in tax, right? The matter is whether the asset has been used in that period or not. That is the matter, right? That is the matter. That's what they are going to emphasize here. Capital allowance will be granted for the year of acquisition, right? Year of acquisition, as the asset is owned and used at the end of year of the assessment. Second, capital allowance should not be deferred to a later year of assessment. We can't forward to the next year. Capital allowance is not granted in respect of road vehicle, right? Road vehicle means, right, car, right? Normally it's car. Capital allowance is not granted in respect of road vehicle other than a commercial vehicle, a business or minibus, a good vehicle, or heavy general purpose or specialized truck or trailer. Right? Normally we say road vehicle as car, jeep, pickup, Prado, that kind of things. Right? To travel between office to his residence. Right? For executive officers, not for the not this say the minibus and other van which is used to transport employees from from their residence to the office. Employees mean minor staffs, workers, right? Those vehicles are not road vehicles. Commercial vehicle means a road vehicle designed to carry load of more than half a ton or more than 13 passengers, or vehicle used in transportation or vehicle used in rental business. So commercial, right? So normally a company use a car for the use of manager. That time it's a road vehicle. If the vehicle is used for the business purpose, for delivery of items, delivery of service, to transport some kind of passengers, so for that time it is not a road vehicle, it is used as a commercial vehicle. It's a commercial vehicle. And capital allowance will not be granted for the year of disposal, as the asset is not owned and used at the end of each year of assessments. The point is here, right? As I told you earlier, if the asset is used for a single one day in the year of assessment, we have to give full depreciation, right? We have to allocate 12-month capital allowance, right? If the asset is sold, right? Asset sold on March, sorry, 1st of March, not 1st of May 2020. How much accounting depreciation here? Accounting depreciation, how much? Depreciation, accounting depreciation, how much? The asset is purchased on this date or any other date, right? The cost is 1 million, useful life 5 years. Then it has been used how many months? Only 8 months. It has used only 8 months. Not 8 months. January, February, March, April. Only 4 months, no? Yeah, 4 months. Then how much depreciation? Accounting depreciation, how much for this asset? How much? Any answers? Accounting depreciation for the asset? How much? accounting depreciation, per year, how much? 200,000, right? Per year, 200,000. But it has been used only for 4 months: January, February, March, April. January, February, March, April. 4 months. So we have to divide how much? 2 million into 12 into 8. 66,600, right, this value, right? Right? How much? Capital allowance. Capital allowance, how much? Capital allowance for that year. If the asset has sold on this period, on this date, how much? Capital allowance? Zero. No capital allowance. Right? No. If the asset sold during that year, there's no capital allowance will be granted. Right? That's what emphasized on here. Capital allowance will not be granted, right? Capital allowance will not be granted. Capital allowance will not be granted for the year of disposal, right? Capital allowance will not be granted for the year of disposal, as the asset is not owned and used at the end of year of assessment. If depreciable asset is partly used in the production of income from business, so one person asked me, explain again, right? So it's mean, so in summary is this, the summary is this: if any asset purchased during the year of assessment, we have to give full depreciation for that year, right? If any asset is sold, any asset is disposed, there is no capital allowance will be granted for that year. There is no capital allowance will be granted if the asset is sold in that year of assessment. If any asset has been purchased, regardless of the date, regardless of the period of use of the asset, we have to provide full year capital allowance, right? Okay, asset sold. If a depreciable asset is partly used in the production of income from a business, at the end of each year of assessment, the cost of and consideration receipt for the asset shall be apportioned according to the market value of the part of asset that is issued in the production of income from the business, and that part or not. Right? Here, the number of years is defined here in this table. Right? The class of asset, depreciation, and number of years as follows. Right? You see, computers and data handling equipment, right? 5 years. Business buses and minibus, goods vehicle, construction, earth moving equipment, heavy general purpose or specialized truck, tailors and tailor mounted container, plant machinery, also 5 years. Government approved year 5. Road car, locomotives, equipments, vessels, barges, ducts, and similar water transportation equipment, aircraft, specialized public utility plant, equipment and machinery, office furniture, fixtures, and equipment, any depreciable assets not included in other class, 5 years. Building, structure, and similar works, 20 year, right? Intangible assets, right? I will uh, yeah, it means here an asset value is 5 million. Value of the asset is 5 million. Say it's a building, right? It's a building. It's a building, and it has so many rooms. So many rooms. Say it has 50 rooms, right? This buildings belongs to a company or a business organization, an organization, right? Out of 50 rooms, they are using 30 rooms for business, and 20 rooms for rent out, right? For rented to outside, to third party, right? Now, what is the portion of the what's the portion of the building they are used for the business? What's the portion of the building they have used for business purpose? 60%, right? So for the building, 20 years, no? 20 years. 20 years. How much annual depreciation capital allowance for that building? Capital allowance for the year? Capital allowance for the year, 5 million divided by 20 years. How much? 250,000. Out of this 250,000 for business purpose and rental investment, right? For business purpose, we can allocate only 60% into, we can charge capital allowance only 150,000 for that business, right? So that's the fact they are explained here, right? Right? Clear? Clear? And any questions? Sir, can you explain accessible charge? Is it for profit on sold asset? Yes. If there are any losses, we call as balancing allowance. If there are any profit, it's called accessible charges. Right? MS12. Clear? For losses, we say balancing allowance. For profit, accessible charge. And